morning. What's going on, everyone? Charlie here. We have a new filing to talk about out of the Nasdaq. This one is Nasdaq 2021-040. Notice of filing of proposed rule change to establish the extended trading close and a new extended trading close order type. Oh boy. So the purpose of this one is to adopt new equity 4, Rule 475 or 4755 to establish the extended trading close. Now, the extended trading close will allow participants an additional opportunity to access liquidity in Nasdaq-listed securities at the Nasdaq official closing price for a limited period of time after the Nasdaq closing cross. Now, the Nasdaq closing cross refers to the Nasdaq's process for determining the price at which it will execute orders at the close and for executing those orders as set forth in this rule. And the LULD closing cross, what that is, it's the limit up, limit down closing cross. And it refers to Nasdaq's modified process for determining the price at which it will execute orders at the close following a trading pause as set forth in Rule 4120A, which exists at or after 3:50 p.m. and before 4 p.m., as well as the process for executing those orders as set forth in Rule 4754B6. The exchange also proposes to amend Rule 4702 and Rule 4703 to establish new ETC-eligible LOC and extended trading close order types that may participate in the extended trading close. Now, the extended trading close will be the process described in new Rule 4755, during which ETC-eligible orders, and again, ETC-eligible orders is exchange-traded close eligible orders, which would be the two new ones, ETC and ETC-eligible LOC. So it's during which those orders may match and execute at the Nasdaq official closing price as determined by the closing cross for a 5-minute period immediately following the closing cross. So we're only talking about a 5-minute window here. And that 5-minute window will occur at starting at 4 p.m. or at 1 p.m. if the market closes early for holiday, and it will last approximately 5 minutes in 5-second intervals. Likewise, the exchange will cancel executions in a security that occur in the extended trading close to the extent that the exchange nullifies the closing cross in that security pursuant to the rules governing clearly erroneous transactions as set forth in Rule 11890. Now, I know a lot of this is a lot of technical jargon. I apologize about that. I will get to the meat and potatoes of this here in a second. But for those wrinkled brains, I am just going over these order types real quick, and then we'll get to the more understandable stuff. So the order types that are going to be eligible to participate, again, are the two new order types that they're proposing. We have the limit on close, or LOC, and we have the extended trading close, or ETC orders. Now, the exchange proposes to cancel any portion of an ETC eligible order that remains unexecuted at the conclusion of the trading close, or for which the system has suspended execution, due to price deviation, or that suspension remains active as of the conclusion of the extended trading close. All ETC-eligible orders executed in the close will be trade reported anonymously and disseminated via the consolidated tape. Now, this is the first type, ETC-eligible LOC orders. Now, this is very jargony. Basically, the eligible LOC orders will continuously match against other eligible LOC orders and ETC orders and execute at the Nasdaq official closing price as determined by the closing cross, except that the system will suspend executions of eligible LOC orders whenever the after-hours trading last sale price or best after-hours trading bid or offer deviates greater of 0.5% or 0.01 from that closing price. The system will resume executions during the extended trading close if and when the after-hours trading last sale price or the after-hours trading best bid offer returns to within those thresholds of 0.5% slash 0.01. Now, it says right here that if short sale orders in securities subject to regulation show are permitted to execute in the closing cross, then the system will also permit short sale executions in such securities to occur in the extended trading close. Conversely, the system will reject short sale orders in securities if short sale orders in such securities were not permitted to execute in the closing cross. That's great. ETC orders, basically what these are, they're going to be eligible for entry execution exclusively during that 5-minute window. And now, on any day when there's no extended trading cross, or if there's insufficient interest to conduct a closing cross, for the security. The system will not accept any orders. The exchange proposes to amend Rule 4703A to add new time in force applicable to ETC orders. The time in force of ETC will mean that an order is designated to activate upon commencement of the extended trading close and deactivate upon the conclusion of the extended trading close, which again, 4 p.m. to 4:05 p.m. Eastern on a normal day, 1 p.m. to 1:05 p.m. Eastern on a short day, and they are done in 5-second intervals, and it will last 5 minutes. So we also have an ETC order imbalance indicator, and this is what I was talking about. It's continuing in 5-second intervals until the extended trading close concludes at 4:05, just reiterating the time frame. And they're also going to exclude ETC eligible orders with minimum quantity instructions. So there's going to be a quantity instruction minimum that must be met. So anything that doesn't meet those requirements will not be able to execute. And it says that they propose to exclude those orders because such orders and the size of such orders may be misleading to participants, given that such orders will not execute if the minimum quantity is not satisfied. So, implementation. This will be implemented during the fourth quarter of 2021, and 30 days before they implement it, they're going to send out a Nasdaq trader alert announcing the launch date. Now, as far as ape speak, right, smooth brain speak, this filing creates an additional opportunity for participants to execute orders in Nasdaq-listed securities at the closing cross price for a limited time period after the closing cross concludes. Moreover, as a means of mitigating the risk that the aftermarket trading price of a Nasdaq security will rapidly and substantially deviate from the Nasdaq official closing price for that security and thus cause orders in the ETC to execute at prices that no longer reflect the value of the security, the exchange proposes to suspend execution of matched orders in a security in the ETC whenever and for as long as the after-hours trading sale or best bid offer of that security deviates greater than that threshold of 0.5% or $0.01 from the Nasdaq official closing price. So again, there's that word again, mitigating the risk that the aftermarket trading price will rapidly and substantially deviate from the Nasdaq closing price. So basically, we have 2 new order types out of the Nasdaq. Will not be implemented until the quarter 4 of this year. They'll give us an update 30 days prior. As far as what this is going to do, it's going to allow them to mitigate the risk in after hours as far as price deviation from the closing cross, and it's only for a 5-minute window, 5-second intervals, and it only applies to Nasdaq listed securities. So there you have it. Nasdaq filing, 2 new orders coming out into this year. Whoop-de-doo.